Good morning, everyone. It's 10th February 2017, and welcome to this edition of ProAMT Traders Digest. Let me go through the disclaimer first. Trading in stocks derivatives involves substantial risk of loss and not suitable for all investors. Past or simulated performance is not a guarantee of future results. All indicators, strategies shown in the video are for education purpose only. All levels discussed in this video are for understanding the study and not a recommendation to trade. Please consult your personal financial advisor before making any trade decision based on this video. We will not be responsible for any resulting profits or losses. So a very volatile day for the Nifty. We had a gap open, a minor gap just above the previous day's range and pushing through the swing high, not finding any business above the swing high and failing. Now this failure did not have anything to lean on, because when it failed we cannot confirm that this is a failure till it gives some sign on the lower side. So till the IB was established, till it pushed through the open of this A period, there were no signs that it will push through the entire range. But when this happened, you know that it's going into the previous day's range, and then later this emotional selling down. Now in this entire rally we have had single prints on the upside breakouts, but we have never had single prints on the downside breakouts. So this is the first time that we are having single prints on the downside breakout, and while pulling up, this single print was saved. So that is one of the important references. Now looking at the SGX, it's trading somewhere into this HVN. So very likely that we open there somewhere into that zone, and still we'll need to see what it does. Any acceptance here would only make it push higher into this 8850, and till it doesn't do that, the chances are that it gets entangled into this. So I'm taking this as a balance. The midpoint is somewhere here, and then pushing through that it might go to revisit into this zone. So that is just we'll discuss the hypothesis on the trigger chart. Now first let us see what happened into this breakdown. So balance forming here. Midpoint pushes through that, and one time framing down. Then no, not even one time framing, it was because it all happened within 30 minutes. So one time framing on a 1 minute or a 3 minute chart, but not on a 30-minute chart. And then forms a balance here, gives a false break of that, and finds some buyers in there. Now these buyers coming here were not so big, they were just absorbing the supply, and when supply is getting absorbed, what happens is it tries to push back into a fairly accepted area, and the fairly accepted area of yesterday was, if we go higher, then first it was this area, and then second was this area. So it makes the way through that. Now I was expecting a touch of day mid, took a while, but worth taking that risk to play for the day mid. So when it spiked into the day mid, let me zoom in. So this spike into the day mid, this is the day mid, it spiked into the day mid. I bought exited the longs and bought puts again, but that did not materialize. Had to give away with the stop loss. Then again went short into this rise, because this rise coming in here and then a consolidation and no demand up here. So when that is happening, again the expectation is to reach the day mid, push to the day mid, and then when it pushed through that, then the initial stop loss moves to this consolidation zone. When it came here, goes into this previous accepted area. The important point to note is the auction travels from balance to imbalance to balance. Now all this is what none of the books have written in them, but the behavior of the auction is same across all time frames. So even if you take a 30-second chart or a 10-second chart, you get a balance, you mark those balances, it goes into imbalance. Whenever it fails, it will come back to the balance. Now these are all tradable insights, but what we need to be careful about is, first we need to see what is happening when it is reaching a defined reference. Is it getting enough demand? So the effort versus the result should be analyzed at these reference points. So I'm just making the process a bit more easier. We don't want to go into the terminology, or don't want to set 1000 defined rules. Instead of that, just play it casually. You're getting a spike in here, that is the first spike. You want to see whether it's pulling back into the demand and what it's getting there. It comes back in there, does not get anything, so needs to spike up. When it's giving a second spike, my intention is to sell. So that was the reason to buy the puts here. Now when I'm selling here, I don't want to sell futures, because the way it has created momentum, if you can see this momentum coming in, sorry, let's build a straight line. So if you can see this momentum coming in, you don't want to hit against that momentum, because these traders can take it above the highs also. Though there is a reference there that there was a single print for the first time on the lower side. So we'll give due importance to that single print, and that was the reason when it goes into that is unable to push through in one go. We want to take a contra position for a revisit of day mid. When it fails there, it pushes through there, you want that it goes into the VWAP. When it pushes through the VWAP, you are then assuming that it will come into this balance. So a very easy way to see how the auction behaves during the day. Now this action with the principle of balance and imbalance combined with order flow would give you the right trade entries and exits. Now let's have a look at the 15-minute. So same story as usual, but this time the sellers getting stuck here, but instantly the supply comes in. These buyers are not able to push the prices higher. So instantly the supply comes in, pushes down into the VPOC of previous day. Again carries its move down, goes to test the lows. Now see, when it's coming to the lows, how the supply is getting absorbed. The delta was going negative, and it's getting absorbed. One absorption came here, that didn't work, that didn't materialize. Now everyone knows what we are looking at when it reaches extremes. This point of control needs to be taken out when there is any reversal coming. Similarly here, this was a positive delta, this point of control needs to be taken out. So when that happens is a confirmation on this time frame, but we don't want to wait for this. But otherwise, if you see, this is a entire balance, this is entire balance with the center here, and when it pushes through that, you want to get into speculative buy positions, and want to aim on either the volume POC of previous day, or you want to aim into the day mid. So both were almost the same, and that is how see all studies get together at some point. So a channel push up higher, finds a bit of selling here, comes back down. When it's coming back down, see, there is no supply, and also it's the 50% of previous day. So there are stops in here because people want to keep precise stops because they love perfection and precision instead of profits. So I would love the third P but not the first two P's, because perfection and precision is not required. What we require is profits. If we want to be perfect and precise, we can become a mason or a plumber or a artist or something. But as a trader, we need to do speculative bets and while doing those speculative bets, we want to just define risk. It's a job of a soldier. We are defining risk, and the targets we can visualize, but not a norm that the targets will come. So by defining the risk, we are just trying to see if it can reach to what we are assuming. It's an assumption and not a confirmation. So now let's have a look at the Renko. So a nice balance up here. This failure to give an impulse and continue up gives an impulse, pushes back, a pullback down, and a huge impulse. Now this impulse did not even pull back that much. Impulse continuation, pullback, impulse continuation gets again the same thing. When it becomes jittery, when it's giving zippers, that means it is losing that momentum which started here. When it starts losing momentum, you want to find a place where you can lean on and enter. So comes into the VWAP of the buyers, and this is also the monthly VWAP. So comes into that. So this is starting from here, from the 1st of Feb, and comes into that VWAP. Impulse up, sideways. Now when it goes sideways, the chances of getting impulse lowers, but still we can hold on till it reaches the day mid, because it needs to reach a defined point to reject. So that was the reason for waiting. So finally pushes into this. So this push is almost the 50% of this first impulse. In a time chart, we won't be able to see how that move shaped up, but here we can see that the move shaped up in an impulse here, and it's pulling back into the 50% of that. So multiple reasons to sell there, and the day mid was there, and it shifted from the day mid shifted from this point. So I think in some of the videos I had discussed about this also, that we when there is an impulse happening, we consider the day mid from the point it shifts. So overall, neutral auction, not much change from the previous day. Now let's see what we expect today. So the first priority, again opening above this balance. If it's opening above this balance, pushes through the highs, comes back and makes its move into the 8860 and then 8870. If it finds consensus there, might rotate there for a while and push into the 8890 as well. Suppose if it fails above this, suppose if it's failing above this, then push back into this, but needs to push back till here, till the high which was made, till the pullback high. Might now this is too mechanical to bounce back. It will lose the momentum and lose the strength, but generally they want to because there are day time frame players that play during the day, and they want to like buy all opportunities that are very mechanical. So might do this, push into the upper balance again, fail, and then move down into this 877570 zone. If it starts accepting there, then make its move down into the 8745 zone again. And in case if it finds buyers here, then again come back and settle into a neutral territory. So that is like two options for open into that. If opens within the range, then we would carry with this, and or we can carry with this. So that is the scenario here. Any acceptance into this. So now see, we have a zone here. You mark the mid. So any acceptance into this would make it, now this time it would make it push through that and push through the 8700. Now let's have a look at the Bank Nifty. A failure of the previous day high in the opening, and then pushes down, breaks the IB and directly pushes through this prominent point of control. A huge tail here, and this is a form of excess intraday gap which is left behind. So you call it an extension handle or name it single print, whatever, but is a strong sign of the participants on this side. So in this case, sellers getting aggressive here. Now ideal situation would have been creating some volume as well in this fall. Now that volume is not there, but because this is an area of attraction, so comes back in and develops value in there. Now from the bottom, if you see, it's trying to hold the lows till it makes a rally high, fails, breaks the previous bracket low and gives us a pullback low. After this pullback low, an inside bar, and again it tries to push up, break the inside bar high. So overall the balance is all here. So depends on the open what it can do, whether it wants to pull back up like the Nifty has done, or whether it wants to accept here, maybe pull back into the point of control and fill up this area. So if somebody is looking for selling, the criteria is it should not try to push into this area, because once it starts accepting here, it will want to scale newer highs. So basically, I'll just pull up the 15-minute. Before that, I was watching at the banks, that if in any case there are any banks in there to check the weakness, because the way it has become weak, I think it is due to the PSU banks. Now the same story in here, uh, starts pushing in. Now the sellers are coming in and going on, whereas the supply is being absorbed in here. So this when this negative bar comes, the supply is absorbed completely, and finally into this push. So it's pushing into the previous day's range, and when it is doing that, it needs demand and not just supply dropping. So till here the demand was not coming, and finally gets some demand, but comes back to test. And when it comes back to test, here the supply is absorbed and we get a bit of positive delta. This is a sign that it has come into this price. If you can see, this is a fair price. It has come into that to test the supply. That means our, again, the idea is to go into the day mid, and it goes now. This is the way the auction behaves every day, because day time frame would be in control and they can watch all this. They love this day mid, and they love to go into defined areas, mechanical zones. So fails there. Now these buyers are not able to push the prices higher. A failure there. We are waiting to get a confirmation. When this is not able to push through this, then expect it again to pull back into that fair price. Does that. So a very methodical auction, and again gets demand instantly. Now this demand coming in needs to push through this area, and in the last half an hour, it's all the intraday orders covering. So now let's have a look at the Renko. A symmetric move down on the Renko. Now the way it has moved, let us increase the size so that we see better moves here. So a nice balance here, breaking down, impulse, pull back, impulse, pull back. Now see, the impulses are getting smaller, and finally they lose strength and go sideways. When they are losing strength, we want to look at a demand coming in. So all this is matching with the 15-minute chart that we saw. Now the delta is being negative, and finally the price is making lower lows. When this zipper happens, now this divergence in delta is not something that I can lean on, because it's good to publicize and good to talk about it, but to trade you need something to lean on. Divergences can stay longer than we can stay solvent. So combining all the data points is what makes a trade entry. So here you get a zipper here. When I get a bit of push through this zipper, that is the time that I think that, okay, this might materialize. And what I'm waiting for is a push into this zipper. Once it pushes into this zipper, that is where we are sure that, okay, the risk is low and the expectation is to push into the day mid. Now symmetric move up, impulse, pullback, impulse. Now very small moves, but the pullbacks are smaller, and finally makes its way through here. Gets selling immediately as it approaches that day mid. When that happens, what I generally prefer is, once I have reached a defined profit, I want to then reduce risk and play with the options. So here I didn't even trade this move. I just traded the Nifty when it reversed from there. So now let's have a look what we can expect for today. So if we go by the overnight Nifty trade, then expected to open above the day mid. Now that may not be materialized because this has become quite weak. So at least I would assume that there is this zone here. So any open above this, so at least above 2310, and then push through this balance, come and test back, and then make its way higher into the 550 and 650 kind of zone. If it's not able to push through this, then if it opens somewhere into this, gets entangled and comes back in, pushes back, comes into this zone, then it'll try to consolidate in this zone first. And if it leaves this zone, then make its way lower into the 19950, and 19880 is the reference for from where the move had started. So that will be an important point to look at the lower side. This is that 19880. So anything wherever it opens, we continue it from there. So here, in case it opens into this, then like this, fail and come back, or push through this, and then we continue with this move, or fail and come back. So these are the points from where it might give that reversal or a move. So I think that's it for today. Thanks for watching and have a profitable trading day.